Rukshat Shroff, Managing Director and Investment Manager, India Country Specialist at JPMorgan, joins us from Hong Kong. Rukshat, good morning to you. Good to have you back on 80 Now. Rukshat, at the current juncture, how are you viewing Indian markets versus rest of the Asian market basket?
Well, at JPMorgan Asset Management here in Asia, we have an overweight recommendation on India. And that is primarily driven by the fact that, A, we can find attractive companies to invest in, and overall valuations are reasonably compelling. So, we have an overweight asset allocation to India.
Right, Rukshat, India is back again on investors' radar. I mean, the Nifty is nearing all-time highs. Do you see more steam in this rally, or is it time to take the money off the table?
No, the fact that we have an overweight recommendation, I think, would suggest that we believe that there is much more to go. So while you say it's on the radar screen, I don't think it has actually been off the radar screen. And foreign investors have continued to invest. So it's close to an all-time high, as you suggested, but with the combination of earnings growth that we're expecting and reasonably attractive valuations, we think that there's more to go.
Rukshat, for Indian equities, the main push has come from global liquidity. Do you expect global liquidity will remain benign into a market like India?
Well, it's very difficult to predict, flows, but especially in the short term. But I think when I sort of look around the world, look at our client base and speak to a number of retail and institutional investors, I can make one or two comments. One is that I think India will continue to see, in the medium to long term, a substantial increase in portfolio flows from foreign investors. There are very large pockets of the world, very large pockets of investors globally who are still underweight or underexposed to India. In some cases, not exposed at all. So there's a fair bit of that money that will shift in favor of India going forward. In the very short term, of course, it's very difficult to predict the nature and volatility of flows. But in the long run, we remain very convinced that foreign investors will continue to increase their exposure to the Indian market.
Does the commodity cool-off and government push to clear stalled large infrastructure projects, could that reverse India's fortunes, or you see a risk of, in the run-up to the election, spoiling the party?
Two or three things here, right? I mean, firstly, let's tackle commodities. Now, as you know, India is one of the few countries that runs a current account deficit. And at the moment, the current account deficit is quite high. It has caused a certain amount of anxiety among rating agencies within the government and has also reflected in the exchange rate. So with the oil price correction and with gold price volatility, I think these two big commodities that India continues to import and will continue to import in the future, if prices remain low and even perhaps stable, I think that would be a big positive for the current account deficit. And if the current account deficit improves, then the risk perception of India, particularly from an external standpoint, improves as well. The currency starts to appreciate, and we get into a more virtuous scenario than we have been for the last 12 months. So that's, one part of your question. On the reform part, we have seen for more than 6 months now a renewed energy within the government, particularly after the change of finance minister sometime late last year, where a number of steps have been taken. Some of these steps are quite difficult to implement, but yet the government has gone ahead. Some of these steps are potentially painful in the short term, but much more beneficial in the long run. And some of them also have near-term inflation implications. But they've all gone through, and I think that this is a reflection of, on the one hand, the government's commitment to move forward. On the other hand, also, there's an element of responding to the adversity that we've seen on the macroeconomic front. Will it stall going up in the run-up to the elections? It's possible that some of these are difficult to implement, some of these are politically, sensitive. But I think if you look back over time, most governments tend to follow the path of reforms. The pace changes, the priority changes, but I think that I remain confident, based on experience over 20 years almost, that the reform momentum will continue going forward.
Right. Rukshat, the RBI recently cut rates, though cautioned that there is no room for more rate cuts. Does this put India financials in the sweet spot? How do you, look at the financial space right now?
Well, I think the RBI's, rate cut last week the comment that they made was there was limited room. You have to bear in mind that the RBI is also conscious of two other important variables: inflation, which has been very, very sticky over the last 18 to 24 months, but it's beginning to correct. And whether you look at CPI or components of the wholesale price index, inflation's heading in the right direction. And the other thing that the RBI looks at is the government's own fiscal balance. And I think that the finance minister has made concerted efforts in that direction as well. So I remain confident that the central bank will continue to moderately reduce rates. In terms of financials within the portfolio, this is our single largest exposure as a sector, continues to remain so. We believe that financials offer a number of attributes. It's also a way to play consumerism in India, and some of these companies represent among the best managed in the country, and so we remain quite confident. So we're bullish on the financial space.
Right. What about the consumption part? Do you think consumption as a theme is still alive and kicking, even though in last couple of quarters auto sales have been sluggish? But if I look at the kind of commitment we've got from Unilever for the India subsidiary, that is some kind of an harbinger that global players are hot on India.
I actually don't know what the outcome will be in the next couple of months. And the way we invest our clients' money, that's not really a relevant or significant time frame. But if you extend it out over a year or 3 years or 5 years or 10 years, I think the consumption theme is a very compelling one. A large part of India's economy is consumption-driven. India's consumption is starting almost on every parameter from a very low base in absolute and relative terms. And as the economy grows at 7 or 8% in the long run, employment is increased and there's more money in the hands of the consumer. Consumption of pretty much every item is likely to increase. And there are a very, very large number of diversified, well-run consumer companies. In some cases, the stocks may appear expensive. In some cases, they may be more, compelling. But in the long run, I think this continues to be a key driver of the economic growth and a key opportunity within the stock market.
Right. What about the Indian IT space, Rukshat? Is there a case for higher PE multiples or a potential re-rating purely from the fact that, these stocks have been beaten down?
Possibly, yes. The case for higher PE multiples. These are, again, the IT sector, the IT services sector is to be differentiated with the rest of IT in Asia. This is not hardware driven. This is software. This is people. This is a high return on capital business. And therefore, once the confidence returns that some of the near-term headwinds, whether to do with U.S. immigration policy, the exchange rate, or, some amount of U.S. corporate spending being held back, I think once these get sort of restored to a more normalized level, I think there is room for a re-rating of the IT services sector to take place. It may not happen immediately, but I think in some pockets, stocks do appear undervalued.
What about cyclicals? What is your stance there?
It's a very broad definition. I mean, it depends on what you define as cyclicals. But I think incrementally, our approach within the portfolios has been to add to cyclicals. That doesn't mean that we add to all cyclicals. As you may be aware, we tend to be very bottom-up in our investment process. So it's not driven by cyclicals or non-cyclicals, or even for that matter, sectors. But we find value in certain cyclicals, and there are a whole host of companies which are well managed. So some of them may be in the banking space, some of them may be in the auto space, some of them may be in the cement space. But we do find value, and incrementally, for more than a year now, we've been adding selectively to quality cyclicals.
Another sector that has really performed well in India is pharma. You don't like the space at this point?
No, I do like the space. But again, it's very easy to club all pharmaceuticals under one sort of homogeneous sectoral grouping. I think that the business models within pharmaceuticals are very different, and one needs to be very bottom-up here. So we've seen recent results where some companies have declared absolutely fantastic blowout numbers, and on the same day, within the generic space, companies have declared 25 to 30% decline in earnings. So the imperative to be bottom up in this sector is perhaps higher than in others. We do have a number of companies in our portfolio, some of which we've held for 10 years and done very well. So yeah, we like the stocks, but I would recommend a bottom up approach here.
Rukshad, gold and crude prices have cooled off, and that has certainly helped, or that will certainly help India's CAD. In the light, how do you see the currency moving?
I think if the current account deficit improves, I think there's room for the currency to appreciate versus the US dollar. Now, that's the sort of simple answer. We have seen weakness in the currency recently, and on various measures, the currency does appear to be between modestly to quite meaningfully undervalued. I guess the second part of that equation, which is more challenging, is what happens to the counterpart, which is the US dollar itself. But I think broadly speaking, I would be at the margin a buyer of the Indian rupee at these levels.